The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman here, Tiger Technicians Hour, August the 2nd. Let's see, August the 2nd, Friday, the last day of the week. I'm here Monday through Friday, 11 o'clock till noon. And 877-927-6648 is the number to call. 2 great hours, Steve and Tom this morning. Really, just a lot of information. Great to hear them. Got a couple of questions that I have been asked about. It's the dollar, bond, gold, transportation index, yields, indexes, and the fact that the New York Stock Exchange is just a hair away from making that requisite leg D in the monthly chart. The Qs possibly today could be making peak C, leaving just one little pop to the upside next week to make that D. What do we look at? So let's start off. I'll just give you the numbers. Dow's down 59 at 15,569. Made a new recovery high today. Let me just check. I should know that. Been watching it all day. No. So we've got a potential peak F here. I could recycle if there's a brand new move above into the 15,660s, and possibly a peak F here in the S&P. That's the daily chart, and as I say, you got to be prepared for recycles. So far, the technicals that I'm looking at, that I discussed with my subscribers in my opening call, know exactly what we're looking for. But even more important than what we're looking for, the interesting thing here is that the composite index, so the S&P is down almost 1703. The composite index is down about 7 at 3668. Well, if the Qs, 1, 2, 3, that's the NDX 100. No, they made a new high today. So you cannot get a peak C until Monday, and you cannot get a leg D until Tuesday at the very earliest. If everything goes according to the plan here, MACD's at 85%. Oh, MACD is strong with the M formation unfolding, and the stochastic is good. Now, when I do this and I move that line, if you're looking at Tiger TV, what you will see is that the most recent high, the 2 times 75.74, made on July the 6th, 17th, and 18th, we've broken above that. But the MACD is not higher. The slow-moving average is higher. That's a positive. The fast-moving average is so far not higher than when it made that high at 75.74. And the stochastic is way lower at 85. Still good, but at 85%. Now, when we're looking at the weekly chart, this is, in fact, leg F/B. At this particular point, I don't have to lean either way. It's 90% in the stochastic. MACD is making that M formation, but this time both the fast-moving average and the slow-moving average are in unison with the price, and it's gone slightly above the up channel, little mini up channel. I call it an up inside track, Chapman wave inside track zone. That's the repellent zone usually. Now it's turned into a, no, I wouldn't call it propellant zone yet, but it is above it, and it could very well by the end of the day close above that, which would be above about 75, let's call it 76, and it's 76.50 right now. And in the monthly chart, the PowerShares QQQ Trust Series ETF is in leg E, very strongly above the inside track. Now, remember bonds? Remember, some of you might remember we got bonds, 31-year bull market, went fractionally above the very long-term resistance line. A couple of times it's done that, just fractionally above, then gone right back in, almost immediately. Now what's happening is bonds are traveling towards the lower part of the inside track up channels support, major support. First support, it just about held 130 and 25, 30 seconds, somewhere around there. It's called 130 and a half to 130 to 131. Well, the low this morning was 131 and 30 seconds, having a little bit of a bounce. Almost 2 points, a good bounce. I shouldn't say a little bit. I'm looking at the monthly chart, and that is just the monthly chart is still horrible. But a bounce is a bounce, and it's helping the weekly chart. Now the weekly chart stochastic still at 14.51. And what I showed subscribers today was my triple yield chart, even though I knew that the week wasn't completed, but it had made that leg C. And what I suggested was that if we have some kind of consolidation starting next week, we could in fact see peak C in the weekly charts of the yields. Let's go on. So I just want to cover that. And then what I said that I would show a subscriber is this. The TLT has made a trough yesterday at 105, round number. Let me just type that in, otherwise I'm going to forget round number. And I'm going to call it a low just for now. I'm calling it in gray. I'm not going to make it green because we won't know yet. But it has the characteristics that I look for in the H pattern that goes below the previous low of 106.17, plunges underneath, which it certainly did earlier this morning, and then reverses back up, back into the area of the arch formation that went to a peak D in the Chapman wave above the 106.17 left side low of July the 2nd. Is that July the 2nd? July the 5th. Okay, so now what's important is the bar that takes out the low must either be the bar that goes back into the arch formation or immediately afterwards. Well, we've just done that. So that's a good sign. There's a positive divergence between the slow stochastic making higher lows as the price has made lower lows. So that's a positive divergence, and the MACD is acting very well and could deflect upside. We're going to watch this closely. My anticipation is that the Dow and the S&P are going to be weaker. The New York Stock Exchange might not make that move in this particular session. It might have to it might pull back before it makes leg D, and we have to wait a couple of weeks or maybe even a couple of months before it makes leg D. I don't know. It's impossible to say right now because it's just a whisker away from making that. Okay, so now what we've got is gold is up $1.80. Now gold did what bonds did. This morning, I look up and I see the GLD was trading down 2.30, something like that. I thought, woohoo. So I did my little trend lines, and one of the reasons why I wanted to stay in our gold stock that we have in my opening call, which has got a very nice 10% profit already. Yeah, it had more, but now it's come back to 10% profit, is because I thought that there was a down channel that could very well hold support, and if it holds support, the same divergence I was talking about earlier on, where the stochastic is moving and one way and the price another way, that would be reflected not in the stochastic because it was moving parallel to, I'm looking at the GCQ, it parallel to the gold contract, but the fast moving average of the MACD. You remember how much respect I've said all for 2 weeks now, about 7 or 8 sessions. I said, as long as the fast-moving average of the MACD is moving up or holding above the slow-moving average, the green line is above the red line, I've got to respect that, and I've got to think that it is giving support to the internals. And so that means if I look at the question now becomes the GLD and the GDX, the GLD has gone into, remember I was talking about the wide-wicked candle of the 31st of July, and I said, even if we go up or even if we go down, that the level in the middle right here, that level of 127.70 will probably be tested. So what we've done, and we've got to hold the low and we've got to hold the high. If we break above it, even then you'll come back and test it, but it does say that's the direction it wants to go in. Well, we haven't broken the low yet of 126.13. The low today, so yesterday was 126.33. Then 126.37. So now this is very important. I like the way the gold is acting. What I've said is that what I have in terms of signals is not the V-shaped recovery that goes back to the deepest last 2 terrible candles in the same number of bars. That would have said that the GLD would have gone back to at least the low of 130.51, the low of the week of 19th of April, and then gone a little above that, within 2 weeks, it didn't. It's taken its time. This is merely a very oversold rally as far as I'm concerned. Can it go much higher? Well, it can go higher. I'm not going to yet say that it can go much higher, but absolutely, what I'd said is there's a really good chance that it will not go back to the low. Once it broke out into leg D, that it would not go back into that candle, the low candle of 116, around about 160 to 70s in this move. Not now. You should, in fact, because of what I call this is, again, a high volume climactic spike. And that says you should go for 38 to 48 and even maybe 52 bars before you come back and retest that low. Last time it was what? It was 46 bars. You remember that high volume climactic spike? I haven't put it in here. It's not nearly as it's not even close to the drama that it had back on the 15th of April. So let's quickly run down those aspects. Then I just wanted to quickly show the TLT. The TLT is bouncing, but it's a TBT that I mentioned to subscribers the other day that needed leg D. It's got the leg D, excuse me, possible peak D, but as of now, all I can say is it's in leg C in the weekly, just like the yields are, just like the TYX.X, and that says, so I've got it in, the TYX on a daily basis is an E/B, but look, the weekly chart is leg C. So this is going to be very important. Why? Because the stochastics at 90% of the MACD still expanding. So yields, to me, still look like they're going to go higher. We've got a chance right now that for a week, maybe a week and a half, maybe 2 weeks, there's a pullback. 35, 36 is major support on the TYX 30-year Treasury bond yield. Final thing that I'm going to do is I just want to look at high-grade copper. High-grade copper right now is up. Nice, I like that. That's a good sign. So put the package together. Now let me just quickly do the Dow, and then we go to our callers. The Dow, you see, this chart pattern that I'm looking at, that candle yesterday, the technicals failing, the candle that we're looking at today all says that, yes, you've got to consider two patterns. One is there's a triangle pattern that's hardly ever spoken about, and that triangle pattern can be pretty potent as a top signal. Then there's another signal that we're looking at, and I'm drawing them in right here. This is the daily chart. It says, what if we've made Chapman wave? Oh boy, nobody wants to hear this unless you're a bull. What if we've made a Chapman wave, I'm going to say it, stalk leg formation? That would say we can chop around here just a little longer, then have a sudden spike to a new recovery high, and then pull back sharply, and then you start a brand new move to the upside. That's the scenario. Possible. I'll be back. And we're back with Mike in Long Island straight off.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, question of the den. Wow, how low can the VIX go, asked Claw. Well, this is the double, this is that H pattern. I said I didn't think it would break 1207. But it's at 1225 right now. It's ready to a peak A minus if it pulls back a little further. Look at that weekly chart, and that's for my subscribers this morning. I had this really big print. I said in my overview section, I took 2 or 3 lines, and I said it's all about the VIX, the VIX, the volatility index. I'll talk a little bit more about it in a moment, other than to say it is getting real close to an area of support between 1209 and I say 1398, something like that. That's what I'm watching very closely. That's number one. Number two is the GDX, and then I'm finished with some of these questions that I had earlier. The GDX has not yet got a down arrow because the MACD has not yet crossed negative, but the GDX is at 2630. The 120-minute chart says that 200-period exponential moving average at 26, around about 2631, that's going to be really important. It went above it. You know, it always has to come back and test it. It often slips a little bit underneath. What you want to see is by Tuesday afternoon that the GDX is up at 2570 to 2630. Why? Because it'll be treating the 200-period exponential moving average in the 120-minute chart, that is, as former support resistance and now back to support again. But I'm not that happy that it's under the 9-period exponential moving average for 2 days in a row. So I want to see by the end of the day it gets to 2662. But if it doesn't, it's just filling in the gap, and the high of 25.89 is going to be really important support that it must hold. So let's leave it there. The weekly chart of the GDX is still farm. It was the first time. It only closed above the 90 EMA once. That was last week. Since it broke down about 8 months or 10 months ago, was it 12 months ago? Since it closed underneath there. The last time it closed above was back in October of 2012. So, hey, give it a chance. It's just trying to do its best. Let's go to Long Island, and we'll go to Mike. Hi, Mike. How are you?
Good, Basil. One question on the C's, on the Qs.
Yes.
Is an F out of the question now?
Oh, absolutely not out of the question at all. That's the question, folks.
Is it out of the question or not?
The question is it possible in this particular buy mode in the QQQ Trust Series to go above D? And absolutely it is. It's only my anticipation that we're going to get a pullback and then go to D, which will be just nominally higher. But the MACD is still positive, but it's weaker than it was before. And there's another indication of very toppy action coming up over this coming week. And that says to me, based on the stochastic, which is at 85%, just the pattern that I'm looking at, the on-balance volume as well as the RSI, it's becoming extended technically, so that, you know how people talk about it's going up without volume. So I don't use volume in that way at all. I use on-balance volume. It's very different. And I'm saying at this particular point, everything's in sync, but I'm starting to get some signs that tell me that the rally is becoming very extended. But
I meant with CB, with the C, you have a B/E there. Now, if
you're talking about the weekly chart.
Could the C become an F? And since we're in, the SPY is in an F, and the, everything.
Yes.
The, Dow
so you're talking about the weekly chart. Well, the weekly chart,
the weekly, the daily.
Oh, the daily.
The daily.
Oh, B-E, could it be F/C? Oh, okay. Oh, I should have typed that in. I took away the F because there was no characteristic to show me that it was F. This absolutely looks like a leg C. So I'm putting the F in only because you got the parallel wave count. You may as well put it in because it gives you that little sense of security so that you know if there's a very sharp pullback in the Qs from 76.60 all the way next week by Tuesday or Wednesday down into the 75.29 area, which would be a complete failure, very unlikely to go to D after that. That's a very good question, but I'm basing it on, I didn't finish my 120-minute chart. This is A, B, C, D, A, B, C, D. This is the second D, and instant restarts had the capability in the second buy mode, as you know, to go to an E and an F. And that's what would get me from a peak C coming up maybe Monday if there's a pullback, no new high, to leg D. And that would correspond to the E and the F in the 120-minute chart. Now, for anyone listening, that's kind of difficult to visualize, but we've got charts in front of us. I'll finish off this chart. And then your other question was, what stuff did you want to look at?
A COO when you get a chance.
Okay.
I'll get off the line, and you can just look at it.
A COO, okay. I'll be right back. Straight off these messages, comes down 30. 39.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. Just real quickly as we go to our next call, I want to just say that's Cooper Companies. I don't know if that's Cooper Tire. I think it's Cooper Companies. Is walking the 9-period moving average in the weekly chart. It's in leg D. Monthly chart is in leg C. Still very, very positive. See, that's one of the reasons why I'm not sure yet how much of a pullback we will get right at this particular point, because there are still too many rotational stocks, with some stocks acting very, very well. So the dailies in this is a spike that says you've got to be real careful, because this could be a right arm, this could be a rogue wave E that was made yesterday, and now it's pulling back. So I'm going to be watching this closely. All I can say is that if you're in it and you're long, I take a little bit off right now. Why? Because there's a chance that it could pull back, especially if it pulls back below 124. It's at 127.92. And the other question was VUE, and then we're going to go to our callers. VUE, or was it VEU? VEU, I'd never seen it before. This is the Vanguard. Listen to this. This is the Vanguard International FTSE World Exchange US. World Exchange US? How can it be World and US? Yeah, whatever it is, it's international. And this has got that same U formation after peak E top that was just made the other day on the 24th. And the weekly chart is recovering. It's above the 9-period moving average, having made a peak D. I don't have time, but it made the Chapman wave unconventional flat base restart. And I don't want to talk about that right now, but it's making an E, a possible peak E in the weekly chart right now. And the monthly chart I didn't get a chance to do, but it looks to me like 50.62, and it's trading at 47.07 VEU. That's going to be the target over the coming months, and it's going to break above it and then come back and fill it in. That's going to be very interesting. So the upside target will be 50.62 and 52.08. Great support right there at 42.52. Let's go to Mike in Ormond Beach, patiently waiting. Hi, Mike. How are you?
As of yesterday, we went to the higher high in the indices and everything.
Yes.
And being the first of the month, at this point, we need to have lower prices in September to confirm the monthly peak D.
So let me just explain that, because those who understand the Chapman wave methodology understand the whole process in terms of time frames. Sounds like crazy, waiting until, let me just check, I'll tell you right now. Waiting until Monday, September the 30th to actually know. It's almost two full months.
Right,
why?
Confirmation.
Why? Because in the monthly charts, each bar is, of course, 1 month. So if on your first of the month you make a new high, in this case it's not just a new high, it is an all-time high, it means that you have to wait for the whole of September to see if whatever the high is in August isn't broken. So what I said is, even if we continue, let's just say right now we've got the top in and we're going to go down. Yesterday was the top in. Every single day we're going down, down, down. You still officially can't call it a peak D until the very, well, if it's 500 points and you've got 3 days to go, you can say, okay, I'm pretty sure it's a peak D. But this is going to be a tough one. It's going to be a real tough one, because from July, and now it's floating into August. Why? Because it's not a peak yet. So at this particular point, we still call it a leg D. It's not a peak D. And you can't do anything about it. That's just the nature of the game until it makes a completion with no new high bar, no new high price. That's the whole bar all the way into whatever month it'll be. So, okay, clarify that. Continue.
Okay. The other day I listened to one of your archive shows, and I know you were saying that you thought how this may play out in the longer term, that we might, we should get some kind of a pullback.
Right.
And you didn't think that was going to be a big pullback, and then you thought we would get some kind of a rally, and this could play out over a longer period of time, and then you thought we could get a big pullback, which would mark the end of the socio-economic top.
Right.
Is that correct?
Right. That's correct.
And I know you said in the archive you thought that this all could play out into 2014.
Yes.
By looking at the time and price, did you think that the big pullback could occur somewhere like the beginning of 2014? Is that what you were saying, or you think the rally could continue into 2014?
So here, if I'm correct, this is your question. Your question is, because from the history of the charts that I've shown to subscribers and what I've discussed, the monthly charts can, in fact, go to an E, and very often the monthly charts since 1994 have gone to E. Mm-hmm. And once it went to F, and there was that incredible pullback, very sharp pullback from a peak F that was in 1998, I believe. Is there a chance that we have a pullback? It could be more. It could be a double-digit pullback. Could even be up to 18%, maybe even 20%, and then still go higher. I think that's basically your question. In other words, correct. when I had someone call me recently and said, what do I do about getting into the market? I'd say to them, start at least a position right now, a small position. Why? Because when charts like this continue higher, if you looked at Apple, when it was going up, every single month it looked overextended, and yet it just kept on going higher. Mm-hmm. And then you can't even remember where it was that you wanted to get in, because it just kept giving, it never gave you a chance. So what I said is, because from that very moment that I spoke to him, I said, I'm anticipating, regardless of whether we're going to pull back right now or later, in the end, when I'm getting my major sell signal, which hopefully I'm around and I'm able to get that, it'll be much higher than where we are. Therefore, it's worth starting a position. So in a sense, that answers your question.
Yes.
Now, here's the other part of the question. In the weekly chart, the MACD is flattening out and just barely going positive. That pattern, historically, in my CD introducing the Chapman wave methodology, I call it the flat stochastic and the flat MACD. Very often, that signals that the upside might be limited, but it doesn't negate the buy mode. The stochastic is at 91%. It has to go all the way to under 80%, probably 77%, before it really impacts the weekly chart negatively. So as I'm speaking to you right now, all I can say is that the weekly chart has not yet given a signal. If by the end of the day we were down 95 points in the Dow, 11 points in the S&P, and the composite held sort of okay but was down, that would allow the composite maybe one pop-up over the next week, but it would start to say to me, now the stochastic should have been pulling back by the end of the day to about 89 or 87%, 88%. Now you've got 8% in which to knock it off. But the fast-moving average of the weekly chart is at 15,329. That's only 250 points lower. And we've got a doji candle from last week. We're making some, I don't know that we have to wait for the close, but some kind of a doji candle might be appropriate this week. So all I can say is that the weekly chart has an up channel resistance line. I've got that dashed line. And that, if we go to next week, that's at 15,760. If you look at the monthly chart, as I said before, in the Dow, it's up at the, this month will be up in the 16,100 to 16,200 area. So it's the short term that's going to tell us. But as I said to subscribers this morning, it's just three letters, VIX, until the volatility index, which right now still demonstrates buying pressure. And I love to use the word pressure because you can say they are buyers. Well, not a big deal, they're buyers. It's buying pressure. And as far as I'm concerned, that buying pressure, now here's a chart that I showed subscribers this morning. This is the VIX daily, and it went to a peak G. Unusual, but it went to a peak G. That's like a right arm extension. Went to 21.91 on the 24th of June. But coincidentally, on the 24th of June, the XIV went to 17.90. So what's happened? They should be mirror images, but they're really not. But they're more directional. Mostly they go in opposite directions. The DOG, DIA, that's 100% short the Dow and 100% long the diamonds. They have a much better visual correlation between going up and down. Maybe this is it. Let me just pick it out. Let me see if this is the one. Dow Daily. What is this? Yeah, the dog and the diamonds. You see, that's a very nice, if you're looking at Tiger TV, folks, look at that nice correlation there. And now you can see that the Dow's flattening out, and the DOG, the DOG, ProShares Trust Short Dow 30. And, folks, you can learn all about these ProShares right on the front page of TFNN. See, it's flattening out, and that's hinting to me that the DOG is wanting to start to rally very, very soon, and that the diamonds are bumping into resistance. But I have to have the confirmation that the volatility index, to top it off, just to make it even more difficult, has got a Chapman wave instant restart here. So this could, in fact, I hate to even say it, this could, in fact, turn out to be leg A. Let me make it change the color. And that could be B. But everything about it, when I do it with the stochastic and the MACD, says those are the characteristics that say you can go to an F and then a G, and then you're going to come down. So when that XIV starts its descent, the volatility index will start its ascent. And it's creating the cup formation, the arch formation that I love, the dreaded H. 1207 was the low that it has to monitor. We have to monitor. If it either plunges underneath and the very next day starts to spiral higher, it doesn't matter. What I really want to see is for the volatility index to get above 15, hold in that area, then go to 16s, and the weekly charts have to start to show the pattern of higher highs and higher lows. That's what I'd be looking for. It's the only way you're going to get sustained selling pressure. But when I looked at a stock this morning, what was CCI, Cummins Engine. No, it wasn't CCI. It was JEC, I think it was. Jacobs Engineering? Yeah, Jacobs just broken out. I don't know if this is leg E or leg A, but it's looking fantastic. And this is, when I look at the industrial side of the economy, there are some stocks that are doing really well. When I look at the very telling Hertz rental, this is the global rent, Hertz Global, that seems to me to have topped out here. That's telling me that there is an economic slowdown is going to come, even if it's going to be short-lived, because it was all the way up. Look at this fantastic chart. We used to be long this chart all the way from, can't even remember anymore. We were long the chart from, I've got it written down here somewhere. It's on the daily chart. Well, we were long this chart. We took very nice profits, 42%, and then a 64% gain. And we got out around about 20. I think the last time we got out was, maybe it was 24, 25, I'm not sure. And now look what it's done. It's made this doji top at 27.75. 27.70 was the next bar, the 26th weekly chart, 26th of July, and now it's pulling back. If this breaks under 22.03, that's when I think we will see a deeper pullback in the general market. Because look how it's been. Look from the low that it made back in July of 2012. That was a month after the June low in the Dow. It's just followed. It's the 9-period moving average has been great support. So I actually started my career. Someone asked me the other day to talk a little bit about my market career, but I didn't really want to do it. It's kind of boring. But I used to use one stock when I started off. It was called Prime Computer as my market indicator. Just one stock until I learned, well, if they get taken over, which eventually they did, I better find other indicators. But so I'm not going to use this as one indicator, but I'm going to say it's very telling that the weekly is making a peak C. It'll make a peak C absolutely today. Now, if it doesn't go above 27.75 this month, so it's a little heads up. That's all I wanted to say, that you can use some indications, but there's some stocks through this rotational period that are weak, and there are some stocks that are just like LinkedIn, just broke out. I mean, they're great stocks. So I hope I've answered your question. I'm going to make it real easy. VIX goes to the 16s. Watch out below. And if in the market, if the Dow breaks 15,380, it's starting to head down. Hope that helps you.
Thank you, Basil.
Thank you.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Looking forward to the show, folks. Nico and Paige, always fabulous information. It's worth saying to you, stay tuned all day to the shows all the way through to Tom O'Brien wrapping up 4 o'clock to 6. Just real quickly, JCI, Johnson Controls, stock I've followed for years, making a U formation, trying to get back to its all-time high of 42.92. It's at 41.15, not very far to go. Peaky in the weekly, in the daily, peak C. That means next week you can see a little pop above 41.50 to try to get there. So let's go to Ben in Tallahassee. And we'll, hi, Ben. How are you?
Excellent. How you doing, Basil?
Very well, thank you.
Great. Continued phenomenal work. Keep it up.
Thank you.
So, and I apologize. I didn't hear the whole thing. So if you already covered gold in depth, we could probably make this real quick. But if not, I've made some profit already in the past couple of weeks, so I'm at a point here where I'm not quite sure if the dollar truly does soar, if gold's going to tank. But I'm looking at I've been using the 30-minute,
okay,
and a very short-term basis as my kickoff indicator, and it seems to be holding that 200 EMA quite well in the 30-minute. And then you look at the weekly, and it looks like it's staying above that 9 EMA.
Yeah, in fact, I just pulled up the 30-minute. The 30-minute of the gold itself, the GCQ, spiked from the low today of 1283, round number low, right to where the 200-period exponential moving average just stopped dead, right on that blue line, the 200-period exponential moving average. That says that's the level it's going to have to turn into resistance first, then support, and then it's ready to retackle the high of 1333.40. So let's just put that together with the GLD. The GLD had a different chart because it did spike up to the move of 128.92. Now you can see that that same blue line is becoming very critical, that whole area between 126.62 and 126, let's just call it 126. is going to be the major support. I could even put a little rectangle underneath it. I just want to I didn't mean to change it. That was a mistake. All right, well, that's done. I'll have to go back and change that. But what I want you to do is just the dollar index, because you spoke about it. Now, the dollar index, wrong chart. Let me just you got to make haste slowly. That's a very famous expression. See, the dollar, I wasn't impressed with the move at all. It went up and has pulled back. I think that the dollar, and you remember, what I've been looking for is the euro to make leg D. And that, I don't know how the Chapman wave works like that. Could be totally wrong, but the euro should go above the high of 133.439. Once it does that, how it reacts and holds is going to be very important, because it's got another high at 1.34. So if you put that together, I think the golds have been beaten down mercilessly, and they are having an opportunity to bounce. I'm calling it right now a bounce. It could turn into something more. That's fine. I go step by step. So I think you're absolutely correct. The GLD, keep playing the GLD. We have a gold stock. I like it. It's acting well. Trying to get the equivalent of the GLD. It just doesn't pull back. It would have done today if we opened up at the low. It would have been perfect for us, and then it sprung back. I like it as a trade. Keep it as a trade. It could turn into something more of an intermediate term position. So, yes, the GLD, I would stay with the GLD at this particular point. I think the dollar has limited upside, and that's the reason why I'm saying I don't know yet how the market, what kind of a pullback we will get in the market, but it's individual stocks. For instance, we got a stock today that's just popped up 2.24%. It's up 77% since we got in. I want to stay in that. I think it's going to new highs. That's the way I want to do it. Individual stocks and the indices, when you get a real good feeling for an indice that has changed its direction. And GLD definitely has much more upside right now than the downside. I hope that helps you, Ben.
Very good. Thanks a lot, Basil. Have a great weekend.
And you too. Thank you so much for calling. Always appreciate it. Folks, stay tuned for, you've got just a really great show. This is all about the body. You've got Nico and Paige. So stay tuned. My service is the opening call. Hey, check it out this weekend. It's really informative. The charts I gave this week are fabulous. I'll be back on Monday. Have a great weekend.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.